Good morning, everyone. Today is November the 14th. My name is Anne Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. What are we looking at today? All right, so the first thing is let's just take a wide angle look at the market in general. We always look at our weekly charts, and so we've got SPY sitting right here. We can see this is a very tight moving average, and we can see that counting the beginning of this week, it would be 5 weeks ago, we actually began to print above this very tight moving average. And so it tells us that with these higher lows, traders are trying to come in. Under this backdrop, we've got CPI numbers, which really caused an incredible squeeze that has carried on for a couple of days. We have the Fed raising rates. We have CO2 initiatives. We have elections. We have crypto blowups. There's a lot of news going on in the market. And so trading, if we're getting sucked into the news, trading is going to get a little bit tough. So what I would say is this. If you're obsessed with the news and you really want to get a feel about what's going on and who's saying what and what's happening, that's fine. But when it comes to positioning, you have to think about what's your goal when you get involved in the market. And your goal is, of course, to turn a profit in a specific period of time. Now, if you're a big investor, that might take years. And you have new money coming in, and most investors don't get paid on what it is that they do in the account. They simply get paid a flat percentage or a management fee, right? Or a combination of both, which we fall into neither, right? And so if we are trading to turn a profit, we must then say, all right, how do I make a profit? I make a profit if I buy low and sell high, or I sell to open high and I buy back lower. That's it. That's the only two ways to do it. Whether we do it with theta erosion through options, or we do it directly in stocks, or we do it in the futures market, it's all the same. So that's the backdrop. Here's what we've got going on. We had a lot of internal instruments move much greater than 5% for a couple of days at a time. So things are, open quotation, overbought, close quotation, but it's not really overbought until people stop buying. What is the storyboard you're trying to get at, Anne-Marie? When price action moves the way that it's moved over the last little bit, traders get fatigue. And they get fatigue because they are tired of buying or selling, right? The fear or greed stops kicking in a broad space, and then the prudent say, you know what, I'm going to take some profit. How does price action that stops driving, hey, I want to make more, how does that look? Well, it looks the way our 4-hour charts are looking in the pre-market since Sunday night's open. Notice upside pressure, higher low, higher high. That means we've got a buying event underway, and that buying event is going to give us a couple of waves. And so, usually we have three in general, right? And so the wave action here is now telling us that we should sit a little bit sideways. And so as a trader, what you want to anticipate today is a lack of wide range. Now, there's a very dovish Fed speaker today who rarely gives interviews. And she's dovish, meaning she always talks about interest rates being lower, right? And so she's going to be chatting today. That might push the market up a little bit, but it's probably going to stall out. So you're either looking for double topping action that begins to fail where you can short, or double bottoming action where something comes into a support ledge. This blue is Friday's. It comes into a support ledge and then it bounces. So what might that area be? In my mind, it could be all the way to the floor of Friday's motion, 393 up here, or 399. We're really not looking at much more range than that today. It's very, very choppy. If you've watched me trade the daily contracts, this is a very good day in the SPX. If we're doing those contracts that expire today, probably going to see if we can find some iron condors to move the situation into a better formation. All right, but the same thing is going on in the Qs. Can't breach the high of Friday. All right, and so we expect that this sideways action is going to give us a range. So how do you position on that range? You set an alert, wait for the alert to go off, and then go to a very tight time frame and look for price action to hold. How does price action hold? Well, here we're looking at something that potentially is going to give us that, right? Is this an inverted head and shoulders pattern? It could be, right? But what we do notice is we have higher lows, okay? And we're grinding up the chain into a double top. So what does the chart have to do? What are buyers going to do? They're going to try and come in at the shoulder, right? Or at least this is what I would do. Notice the moving averages. See how they're all choppy inside and on top of each other? That means you've got price action that is, you've got buyers and sellers just fighting. So when buyers and sellers are fighting, wait for the edge. Again, patience becomes a superpower in this business if you know what you're looking for. All right? The higher lows and the higher highs into this edge tell you that buyers are likely to try to hold a foothold. If you say, hey, I'm going to buy it here, then you know at the very least you've got action that could take you all the way back to this zone. I would say let them build a wedge or let them build a channel, and then when the break comes, you just simply follow along. These are choppy formations. For me, I'm going to wait on the edge and take a position and then just trade into support or resistance. If trend begins to hold, that's going to mean the price action is going to give us motion that will break these edges. So pay attention to your stops. Good luck today. I'll see you tomorrow.